What's up, guys? This is going to be a recap today from April 24th. Took two trades today. It was a pretty awful day in the sense of liquidity, right? A lot of no volume, not a lot of volatility. I feel like a lot of big money, and I reiterated this a lot. I feel like it was pretty redundant on live trading today, but a lot of money is just sitting on the sideline waiting for Google, Microsoft, and a lot of these big hitters for earnings this week. So I wanted to trade a few names. But primarily, my two focuses were Netflix for a retest of 330 and Tesla. These were also earnings from last week, so they had a little bit of time to settle. If you guys didn't know, Tesla actually missed earnings, very poor cash on hand. So I felt like big money was going to turn their backs kind of on this name from the gap down, as well as the fact that we were coming off of a distributive pattern. So I felt like this was the perfect time for it, but we had to get our levels right. So I want to show the Discord really quickly, right? I just had this in here. Ended up saying it was kind of a two-way idea. Poor earnings, daily, weekly looked like it wanted to go lower. Kind of just gave my reasoning for this. We were looking at 166 weekly level. If the long side trade was there, if it broke into the gap above, if we got above one of our daily wicks, I'll show that when we go back to Weeble. But the target honestly was 160. Was the no, I'm sorry, daily gap fill down below was 154.76, and if it had broken out to the upside, it would have been 177.65. Definitely did say that my money is on the breakdown, though. I'll give my reason why now that we switch back to Weeble. Right, how I got my levels though. We go to the weekly really quickly. This 166 spot, you guys can see that really started the inverse head and shoulders here. Had been respected one, two, and then almost a third time, but this had been respected a couple times. Never mind really the wicks, right? We just know it stemmed from this 166. I would say down to 163 pretty comfortably, but that was the start of this level, right? And then from, how I got this range here was the candle open on this red day, which was after earnings, right? This was the day following earnings. We can see our wick slightly above, but I wanted to go the open previous day high, which was right here, and then I really took, if we just extended this out, right, this was essentially my red zone, right, to kind of go short on, and I would have gone long if we broke above this top wick, and it would have looked something like this, like a break above base and then go to fill the gap. Fortunately, that's not what happened. And really too, if you guys look at the structure of this candle, right, we had a gap down, very, very high volume. That's always an anomaly when it comes into earnings. What really sold it for me, though, was this low volume and low spread candle, right? If the bulls were really wanting to push this back into the gap and return and reclaim this 166 weekly level that's been so pivotal, why did they have such a poor performance? I know it was OPEX as well, right? That's, that could be a part of the reason, just, rebalancing and restructuring of books once these things kind of come off, the books and they expire, but we still didn't see much, movement on this. So it just kind of consolidated. There wasn't an effort to go higher or even break back above into the 166 zone. Just hung around here, right? And in most people's minds, that is a failure to go higher. In turn, you'll likely see a sell-off, but we had to have our, like I said, our levels down packed, right? So what I wanted to see right off the open was ideally a push into this zone, right? We wanted to get a market move in pre-market up until, like, I don't know, 167.50, maybe like base on previous day high, and then a failed or exhausted move into this range here. I would have been more comfortable taking a short off of this level right around here, kind of like the buy side liquidity up around 167.60, or maybe even the highest, right around here, right? The candle close and then the candle open from the first 15 minutes, or I'm sorry, the first 30 minutes from 420. This was probably the most likely scenario, just because this had the most volume. I think the most amount of trades were placed in this range. This day, like I said, OPEX, low volume. We didn't really know what was going to happen with that, but I did want to use the previous day high as a gauge, okay, because it lined up pretty well with 166. I mean, shit, it was literally 166. So that was what I was looking at. However, I took Schwab, unfortunately, in the beginning of the morning. I took like 3 contracts. I wanted to test out that bull flag that we had on the daily, and it did not work out. And as a result, that ended up being an opportunity cost because I did miss the flush here. it was about, I think it was about 40 cents risk. Let's go ahead and just pull this. So yeah, 35-cent risk between the high here and the previous day high. However, I wanted to get this into the zone. So if I was wrong, right, and it ended up pushing out a little bit higher, that would have been a bigger loss. That probably would have been, a dollar and a half, $2. So I wanted to wait for it to get into the zone. But what we ended up getting, and I wanted to touch on this too, because not every single trade that we take, guys, is going to be picture perfect, right? And what I mean by that, it's not going to be a perfect 5-minute or a 15-minute candle that we need exactly as we plan for it to be, with a perfect volume, and it just plays out perfectly, right? That's what I expected off of this range. However, the trade ended up needing to be more sporadic. It still required good execution, but if you guys heard me all day, I was waiting for a retest, right? Because this started to break down, and I obviously was late to the short itself. But what I wanted initially was for it to pull back up right around here, right as this started to sell off, to get like a retest of the EMAs. Once it kept knifing and knifing, we ended up getting down here, right, which was our low of day. This is like our 15-minute orb low, and I wanted to get a lower high, right? And this is my strategy all the time. Is did the wrong thing. Let's go back here and draw. You wanted to get something like this where it popped out, maybe retested. I'm going to screw up this line, but like right around this range, right? I'm just going to circle it. Retest that, and then come down, right? Maybe come back up, another lower high, and then sell off, right? But that's not what happened at all. And this is why, if you heard me on live, I was a little bit uncomfortable, because I ended up having to take this trade on a 1-minute. And I don't like trading the low of days for short. If I do, it's going to be a 5-minute retest. And if you guys ended up taking a look at this actual trade, right, it ended up breaking down, and it took 2 minutes, right? One candle, two candles for 2 minutes, didn't even touch the level, and then it sold off again. However, if you guys know, and I've talked about this a lot, especially when you're already in a trade, you guys should know that we do ride our EMAs. A lot of the newer people, you guys can keep it on. I feel like some of the more advanced people can just keep an eye on it, and kind of gauge where it's going to be at. But I ended up taking this trade within that 2-minute, confine, and risked the 9 EMA as kind of like my guide, and I was going to risk the 21. If you guys can tell, right, as soon as we started to get this breakdown, it hit the 9 a couple times, but never really broke the 21. Even right here, I still wish we would have gotten that retest of this level. Even right here, I wish we would have gotten a 5-minute, somewhere in this range right around here, right? Something 5-minute in that range. And I was talking about this zone as well. If we go to the 15, I wanted a retest of, oh, why does it always do this? Yeah, that was the first spot. Second spot was like right around here that I was talking about all day. These were the two spots that I wanted retested. Absolutely. But like I said, I had to take that trade on a 1-minute. Ended up working out pretty well. If I go to, let's take a look here. This isn't like a flex or anything like that. I just want to, if you guys know, we always have to kind of show what we're in. At least I personally do, so you guys kind of know that we're all on the same page and we're all taking the trades, and that I'm actually in the trades themselves. So if we go back to Weeble here real quick, or Discord, yeah, we ended up catching it. Me, Voss, and a couple other guys on live, K-Bar, etc. We're really looking at, that 152.5. I took the 155s, but really just kind of got that 1-minute EMA as soon as it broke the low a day, and was able to catch the flush all the way down. I think these went about 120%. But even then, right, if you guys take a look about what I was saying was going to happen, right, I wanted this level right here, 162.72, and I think the other one was 161. Yeah, it was 161.72, right? These are imbalances that are created. And remember, we talk a little bit about fair value gaps. So essentially all it is it's these levels of high liquidity that don't have an opportunity to be retested. And a retest, if you guys think about it, all it really is that there are passive orders that are sitting here waiting to be filled, right, buy orders, that volume is so quick that it knifes through, right, and it doesn't really pull back up to collect those orders and then sell off again. It just knifes, right, and it keeps going and going, and you guys can see, right, there's no consolidation. There's no breaks at all in any of these. Usually you can see it on like a 15 or an hourly candle. It's really clear on there. Sometimes you can do it on a 1 minute. 1 minute's a little bit iffy sometimes, but these candles cover extreme ranges on very high volume, so it's bypassing a lot of these orders, right? So it does have to come back, and it makes sense for it to come back, right? It comes back up, someone's offering you money, it's going to move back up and collect those orders very slowly, but that's essentially what a retest is, right? It breaks down, comes back up, retests the level, collects those orders, gets those people out, and then it sells off again. Or a new bid will come in, new buyers will come in, and they'll end up trying to market higher, either off of like a demand level, or a support or something like that, right? Just whether people figure if they want to jump back in and move it higher, or if they just want to retest these levels, grab that liquidity, those passive orders that were there, and just structurally make the chart a little more sound, right? So we were looking for this 15-minute zone to get retested, which it did, right? It pushed back up, hit, broke back down, consolidated right around 160.56 again, and then it moved higher, and it finally retested and hung around this 162.72. I wouldn't be surprised now that this imbalance has been filled somewhat, that this sells off again tomorrow. We'll really be looking at this one, the low day 158.62 range. But yeah, just wanted to show that really quickly because I haven't done that in a very long time, right? Just taking that breakdown trade. I like to do it on a 5 minute. And remember, you can be sporadic with your trading execution, but be disciplined, because the time that you aren't disciplined and you do kind of change your trading style from your typical robotic structured execution, the one time that you're not disciplined, right? And this, let's say that you take this on a 1 minute or a 2 minute like I did, and it ends up ripping against you and you hold past the 21, that could be a very, very big loss, because we've seen a lot of these fake breakdowns occur, or these fake breakouts that really mess people up, which is why I don't really like to trade the low days or the high days in that same direction. I like to look for the retests, right, off of an EMA or the key level on a higher time frame, or I'll simply wait for an hourly or a daily, or some kind of indication on a higher time frame that this might reverse, right, whether by volume, the candle spread, etc. I really like to look for those. But this, right, 1 minute, used my EMAs, and I actually did pull these up to make sure that I was, going to make myself, disciplined and not break a trade plan or let this get out of hand. But jumped in here, and then obviously you guys saw the results, and it knifed all the way down and then ended up closing this out. So that's a quick one there. Let's go ahead and take a look at AMD next. All right, guys, last one here is going to be AMD. If you guys obviously take a look, we have this falling wedge pattern, and it didn't go as planned. It still did okay, but ideally this would have gapped up just a tad, and held 88.94 to 89. And if you guys don't know, my blue levels are going to be my weekly supports. I have my oranges as like my weekly resistance, and then green and red are going to be my daily levels. Order of operations, right? Weekly is always going to take precedence over your daily. Both are important, right? But I ideally wanted to see this weekly SR flip right here hold, or at least maybe a gap up in pre-market over this level. That did not happen, right? We ended up seeing a push up. It rejected that level, pulled all the way down, right? And we had this one, I wouldn't say a singular level, but we did have this key resistance, which ended up being the level where this really took off from, right? This is the breakout for AMD, which actually started the SR flip onto this key weekly level, right? So it was a pretty big level in itself. It was 86.22. I'm sure, initially I wanted to take my eyes off of this because it did break the falling wedge setup. Also, if we take a look, right, we have our EMAs curled down, so it's starting to begin a downtrend. Doesn't mean we can't take it long, but the big thing that I was worried about was this rejection here off the 50, right? I wanted to get maybe a break above that, and if you guys were in live today, I was hoping we'd claim the 50 and then maybe base on 88.94, that weekly level. It did not happen. So we had to kind of switch the trade plan up a little bit, although it was still within the confines of, the bigger picture 86.22 level. Now, once we were actually in the trade, this kind of started to break down pretty quickly along with the rest of the market. Luckily, we were in Tesla, so this occupied a lot of our time. But what we saw was a series of lower volume, I want to say low spread candles, really, where we saw this, this evening star down here. Um, and really, what ended up catching my eye was down here. Oh, it doesn't have it anymore. But I remember I posted it in the chat on intraday. Let's see if I can find it really quickly. Because what ended up coming to fruition was a inverted hammer. I don't think I posted it on here. That sucks, but whatever. I think it was this candle right here started to look like an inverted hammer with decreased volume. So what that means is it's a bullish reversal candle, and it means similar to what we saw in Tesla, right? Where it's a failure to go lower. Bears could not push it any lower. Bulls were obviously able to push it up, and that's what creates that wick. But you couldn't get a break lower, and that volume really comes from the lackluster ability from bears to push it beyond a level, right? And that level we knew was 86.22. It was that key daily level that they probably really wanted to break, and they could not do it. And then obviously we were stuck in these two candles here on the hourly, which was brutal, right? This was the probably the 2 hour slow grind up where we had our entry at like 50, 54, and I swear the ticks were so brutal. But in the end, it ended up working out where it really pushed back up towards this, I want to say this hourly imbalance. The market was pretty imbalanced today, just from, I would say overall, kind of across the entire board, where we had these big sell-offs and no levels were really retested. So I was really looking for, I probably should have done a array here just to see what it would have been. 87, 83. I thought that's where we'd get back to. We got pretty close, but if you guys heard me, I was talking about the options chart nearly all day that I wanted to get to 75, and that would have been the retest of 87, 83. But a very, very nice clean chart too. You guys can see, obviously we had the lower lows, but a very small spread, right? They weren't able to push it up much further between this lower low and that lower low. That's what equated to that 1 hour inverted hammer. If you guys don't know, remember, just go do a quick research on it. Inverted hammer, very simple, kind of looks exactly like this, right? At the bottom of a downtrend. Usually it'll be green. I like to look for it for a low volume, just indicating failure to go lower, lack of interest to go lower, etc. And we saw that on the hourly. And the reason I was looking at it once again was because it was very close to this 86.22. So I just wanted to keep my eyes on it, and luckily we found our way upon that. But overall, very, very slow chart, right? I mean, this entire move up was just brutal. And the reason I stuck into this trade for so long is we did catch the bottom, and sure enough, we did catch the EMAs here, and it was a pretty easy EMA ride up. And I did this for both my trades today. And I really emphasize that you guys do the same. It'll help you guys milk some of these trades, and I've been using it a lot more now that the volatility's been dampened a tad, and it's going to be crucial this week too with a lot of money on the sidelines. So if you're in a trade, you have a great entry, it's going to be very important to utilize your EMAs and just know that you're on the correct trend, you're on the right path, and milking this as much as you can. Options chart too is a very fantastic tool. You can use these two in tandem. But reason I didn't exit this trade, it was very simple. Never broke the 21, and I was saying that all day. I think right here, it started to get somewhat of a flag, like looked like that initially on the 15, where it started to pull down into the 21. I almost stopped out here, but I did not hit the 21, and then it bounced and really never touched the 21 again, right, until we got all the way up into our zone where I wanted us to retest. Right, I think it was, now that I look at it, it was like right around here. That's ideally where I wanted to get to. Just a little bit shy, but it's all good. I think those contracts went like 35, 40%. So for a day like today, couldn't ask for much more. I should have swung them. I'm not going to lie. I know a couple people in the Discord did. It looks like this might reverse. The hammer is still very low volume. However, there's a clear buyer in the tape here, or buyers plural, where they might be able to retest this 88.94, and it comes down once again to that 50 MA. That's what we're going to be watching, right? If we can get a break above that, I do think this has some room, guys. I really do. I think AMD has a lot of potential along with NVIDIA. I think they're going to work really well with Microsoft and Google because that AI theme is very, very hot. Obviously, semis run together. If Google and Microsoft end up saying something really great about AI, it's going to help NVIDIA, which in turn I believe is going to help AMD as well. So I'm going to keep my eye on this chart still in this 88.94 spot. But overall, really good trade. I wish it was a little bit quicker, but I know a lot of you guys ended up tagging this with me, so Congratulations. But that was all for today. Only two trades. So gonna once again stay very low, light size. Just try to fly under the radar as much as I can. Wait for trends to set up. A lot of my big pivot zones until these big earnings pass us by. At least Tuesday, I'll probably start to play a little more risk on with SPY and QQQ. But until then, there's not much we can do. So just ride the trend and try to stay safe.